He revolutionized the world of finance with his innovative approach, which allowed him to be one of the best investors during the Great Recession in 2008. Over the years, he built the greatest investment fund of the world, which still today works following his principles. He is one of the greatest investors of all time, one of the greatest visionaries of finance. He is Ray Dalio, and I'm here to share with you his incredible journey. Since he was a child, he has always been attracted to money, and this also because his father was a Wall Street trader. And so, since a young age, he started doing small jobs to earn some money. For example, he was mowing lawns or shoveling snow. But there is actually one job that really brought a huge impact to Ray Dalio's life, and this is being the caddy for golf players. Because thanks to that, he was able to spend a lot of time with the Wall Street professionals to get to know them, to understand what they are thinking. And even though he was still very young, he was 12 at the time, he managed to develop good connections with them that even brought him to have a summer job at a trading firm. And that's how he started investing at just 12, with $300 that came from the hard work that he used to buy stocks of Northeast Airlines. And from this starting point, he has never stopped investing. And imagine that just at the beginning of high school, he already had a portfolio of several thousands of dollars. And so during high school, he continued to invest more and more money. And that's actually the only thing he was thinking about. And that's also the reason why at school he wasn't performing really well. But he still managed to enter the Long Island University in order to continue his studies for finance. And that's actually where his passion for finance made him study hard and graduate with academic excellence. And thanks to that, he managed to enter the Harvard Business School, one of the best ones in the world. He had everything ready to a great career in finance. And that's what he was thinking when he started Bridgewater Associates. Because doing that, he was actually accomplishing his dream to be able to work for himself, to be able to continue investing over the time. But unfortunately, these were only dreams because the company failed. He didn't actually have enough experience to manage by himself a hedge fund. And that's why he started working for different firms. And the one in which he spent most time is Shearson Hyde Stone, where he was helping his clients to hedge the risks. But working there wasn't enough for him. He wasn't happy working there because he didn't like the hierarchy that there was. He wasn't free to invest as he wanted. And this actually led him to inappropriate behaviors. Because during an annual convention, he paid a stripper to get undressed in front of everyone. And all of this exploded during the New Year's Eve of 1974, where he punched his superior. And clearly after that, he got fired. And this was actually the lowest point of his life because he had lost his income from his job. He had lost credibility and reputation because of these bad behaviors. And clearly in such a world, it's difficult to re-enter it when you have a bad reputation. However, he saw a little ray of hope when some of his previous clients actually decided to stay with him. They were happy with his job because he was actually having great results. And so he decided to found again Bridgewater Associates. And in the beginning it was clearly difficult. There was a lot of skepticism around him. But he had a solid approach because he was working on the global macro trends. He was absolutely risk adverse and all the choices he was making were data driven. And this led him to have the first big client, which was McDonald's. And after this moment, Bridgewater Associates just saw growth. And when in 1987 the stock market crash happened, his firm was actually one of the only ones that made a great profit from this situation. And this is the moment where his fame actually got out of Wall Street. And this was the perfect moment to develop and release to the market his two main strategies, which are Pure Alpha and All Weather, which still now are the two most important portfolios for Bridgewater Associates. And they are based on Dalio's investment principles. And so they are truly diversified, which means that between the assets in the portfolio, there is actually no correlation between them. As well as you have assets which go well in different situations of the market, for example, in deflation and inflation. There is a focus on a risk adversity, as well as there is an active management based on the macro trends and the historical patterns. And clearly, since we're talking about Dalio, it was data-driven. And this was actually something unique because Bridgewater Associates was the only hedge fund in the world having such an approach. And so this is really really is the moment where he was innovating the whole financial market. And these strategies helped Bridgewater Associates to grow enormously, at the point that in 2005 it was the biggest hedge fund in the world. And this especially thanks to the extreme stability of the investment strategies that they propose, because pure alpha, since its creation, has always went up, as if it was a straight line, despite the crisis that happened in the world like in 2001. And moreover, in 2007, thanks to his analysis on the macro trends, he suggested that there could be a financial crisis. He actually spoke with the US authorities to notify them about the potential risk, and that's why he prepared all of his clients and all of his strategies to this imminent crash. And once the financial crisis arrived in 2008, his pure alpha strategy made a 9.5% return, whereas the overall market lost 38%. And here once again he showed how his strategy is extremely stable and especially crisis-proof. And from this moment on, Dalio has been considered by everyone in the financial sector one of the greatest investors of all time. And Bridgewater continued to grow over the time. And all of this brought Dalio to have a net worth of more than $19 billion. And that's why some years later he actually decided to retire, because at this point he already had changed the world of finance. He had revolutionized the world of finance. And he did that by giving an example of a visionary approach which is based on facts and the analysis of the global macro trends. And that's why nowadays a lot of other hedge funds are trying to copy it. However, despite being a great investor, an investor that changed the way the world of finance works, despite having had all this success that brought him to build the greatest hedge fund in the world, he disagrees with the greatest investor of all time, Warren Buffett, on how you should invest. Why that? Well, you will have the answer in this video. Thank you for watching and see you soon.